The recording has started. Welcome to this ongoing webinar series with the National Real Estate Post and Angel Oak Mortgage Solutions. I am your host, Frank Garay. I'm here with Tom Hutchins with Angel Oak Mortgage Solutions. And today we are going to get into scripting and strategies to generate some new business making use of non-QM products. So with that in mind, do a little housekeeping up front, just to let you know some things that are going on. First and foremost, one of our frequently asked questions is this being recorded? And the answer is yes. I just pushed the record button. So there's about a 97% chance that it's going to work. So what that means is you'll want to still use your pen and paper, take notes, turn off the cell phone, ditch the email, pay close attention because the recording should work fine. You should get it, but every now and then, GoToWebinar recordings don't work. Now let's move on to the next item at hand, and that would be questions. You should all have a questions box on your screen somewhere, or a little go-to icon that you click and you can type in questions. We encourage you just to go ahead and write in your questions as we proceed along. So just throw them in there. I will be keeping an eye on those questions as we go along. If I see something that pops up that I feel I need to interrupt Tom with, I'll do that. Otherwise, we'll probably just wait till the end to field all of your questions. So stick around to the end. Now, the other thing with regards to questions is that if we don't answer your question here on the webinar, don't worry, because all these questions are moved over to Angel Oak and their account executives who service you in your area. They will reach out to you personally to answer your question for you, so you don't have to worry about that. Let's see, what else did I want to bring up? Blah, 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 blah. We got the recording. We got the questions. We got, what else am I missing? I feel like I'm missing one.
I'll throw in just one thing. Yeah. Additionally, Frank, is that we're going to show you guys a couple presentations, and we're going to actually send you the presentations, so you don't have to, take a camera shot of your screen or anything like that. We'll get the whole thing to you. So any of this information, a lot of it's extremely useful, but you'll have it to use yourselves when we send you out the recording.
Yes, thank you for that. And I do remember what I wanted to say, which was, I know that, this is the mortgage industry. We are toward the end of the month here. It is a little crazy right now. In the event that something comes up, if you feel like you have to step away, but you feel like you definitely want to get started with Angel Oak and get this moving, then in the questions box, just type "get me started." So at any point along through this, actually, if you just know, I got to get connected to Angel Oak, because you might not actually be approved with them yet, but if you want to get started on that process, if you just put "get me started" in there, somebody from Angel Oak will reach out to you, and then you guys can start getting connected right away so you can implement everything that we're about to show you on this. So with that, I think I've covered all the housekeeping items. We're at 10:05 Pacific time. It's perfect timing. So I'll just tee it up here for you guys. Tom is going to go through some scenarios for us, and he's going to show us some actual bona fide, genuine scenarios that Angel Oak has been able to perform on, that where there have been dead deals had not the originator been connected to Angel Oak. And I think that as we go through that, it's going to trigger a lot of you to go, oh man, I got one of those right now, right? Or you may go, I just let one of those go, something like that. So you may want to, you may actually be able to do something with Angel Oak immediately based on these scenarios. So we're going to go through these actual scenarios, and then we're going to talk about how to go out and generate some new business, making use of these non-QM products, which is really clutch right now, because everybody, in fact, Tom, we talked about this before we started, everybody's looking to find a way to make some money, in the mortgage industry right now, because the prime, refis have, they've gotten really slim, and prime lending in general, the inventory issues that we have, et cetera. There's a lot of things that are putting pressure on the mortgage industry that are kind of hindering some of the volume that's been going on. So one of the best things that we can do, guys, is put more tools in our toolbox so that we can go out there and generate some new business. Non-QM is probably the leading the leading product that you could be working with right now to generate some new business quickly, very quickly. And we're going to show you where to find that business and give you the scripting on how to get that. So Tom's going to go through some scenarios. I'm going to show you some real-time stuff. I'm going to go through some scripting with you guys and some thoughts on where to target. And that'll be about it. Then we'll field your questions at the end. Sound good, Tom?
Sounds great. I love this format. I think it's extremely informative. We just, one thing I would commit is that we're not going to waste your time. This is going to last an hour, but it's going to be a very beneficial hour for you and your business.
All right. So with that, take it away, my friend. I'll go ahead and mute myself, but I'll still be
Okay.
here. And I'll be keeping an eye on the questions box. So guys, go ahead and throw your questions in there. Again, might not answer them immediately, but get them in there, and I'll interrupt Tom if I see the timing permits. So let's go for
Awesome.
it. Take it away.
Okay, let's get started. All right, thank you, Frank. One of the things that we get a lot is what are non-QM loans? What do they look like? And so we really just wanted to start this webinar with giving you some real life examples, and it's really to just kind of stir your own memory banks of situations, scenarios that maybe you've encountered over the last handful of years. If you haven't been doing non-QM loans, you've been pretty limited in your products. It's the government agency loans, and that's kind of it. And so that's really what non-QM does, and what Angel Oak, that is what we do, is just the outside those agency and government guidelines. That's what our products are. But we get asked a lot is, what are the loans? What do they look like? So thought it was a good idea just to kind of start right here with some scenarios. And these are actual loans that we have closed in the last few months, and we just think it's really important for you to understand what these deals look like. But the first one, not only is it a beautiful house, but this was a $1.3 million purchase. And what happened was the borrower's credit was pulled, and there was no foreclosure on their credit report. But then when the loan started getting processed and some other reports were pulled, look what popped up: a foreclosure that was just 2 years ago. And it wasn't something that the borrower remembered to check on the application. And so our customer came to us and said, "Hey, can you guys help?" And we were really excited because this kind of fits right down the fairway of a non-QM borrower and a non-QM scenario. But it was a $1.3 million purchase. I think the borrower was putting 20% down in this one. I don't remember exactly, but they had a foreclosure 2 years ago, and we got a call from our client, and within 21 days from that phone call, we got the whole loan in, processed, and closed. So it was really one of those absolute deal savers, because without our customer having a relationship with Angel Oak, there's really no home for that. A jumbo loan, at minimum, you have to have 5 years clean credit, and in most cases, it's 7 years. So this was a $1 million loan, 2 years out of a foreclosure, and we got it done in 21 days. So that was really just a great story, but it's what we see and what we do kind of every single day. So a very important thing for everyone to know is through the crisis, there were about 18 million foreclosures. 18 million foreclosures. So that is a big population of people. And a lot of people think, well, foreclosures have really stopped. That, yeah, they happened in 2010 in that range, but after that, they're not happening anymore. But last year, there were over 1.5 million foreclosures. So not only were there a ton during the financial crisis, it hasn't stopped. So there are borrowers out there that are continuing to get in over their heads, or just in a bad situation, or they have a life event happen to them, but now they want to become a homeowner again. So this is just something that you should just keep your eyes out for, and actually let your referral partners know that this type of product is available. So again, very common, not seasoned enough from an event. Probably the number one non-QM product there is. Here's another one that I think a lot of people can relate to, because it's for a self-employed borrower. Right now, there are over 15 million self-employed individuals in the United States. And everybody knows, with this gig economy and where things are headed, there's more and more self-employed borrowers coming into the market every single day. So it's over 15 million now, and it's a growing number. And pre-non-QM, pre-Angel Oak, if a borrower couldn't qualify based on Fannie Mae 2-year tax returns requirements, there's no loan. So this was a loan application. The originator took the app. The borrower said, I made $200,000 last year, and that sounded really good. Great credit, 758 credit score, but they got their tax returns, and yes, they had $200,000 in gross receipts, but their net income was about 25% of that. So they had $50,000 in net income, and the borrower didn't really understand why, why the $200,000 number didn't work, because they hadn't had a loan or hadn't been through the process recently. And so they contacted us about our bank statement loan, and the bank statement loan was able to save this deal. And on a bank statement loan, we're not looking at tax returns. We're looking at a borrower's cash flow, either in their personal or in their business account, and then using that as their income, because we believe bank statements are a much better indicator of someone's ability to repay a mortgage than the tax code and tax returns. And people that are self-employed, they do that to take advantage of the tax code and be able to write some things off, and that's just part of the world. And again, we just believe that the IRS and the tax code is not necessarily the best way or the only way to determine a borrower's ability to repay. So this loan came in, we used the bank statements to come up with their income, and they got a $750,000 loan. And we know, using tax returns and that income of $50,000, there's no way that borrower would have ever qualified for this loan. So again, another big category in non-QM is this alternative income bank statement for the self-employed borrower.
There is a question here that pertains directly to this, Tom.
Yes.
Which is, with respect to the bank statements, what are you guys focusing on? Is it the personal or is it the business?
Okay, yeah, it's either. It's one or the other. It's personal, where a borrower has a business and they pay themselves in their personal account every single month. We look at 12 months and we're looking at the deposits and averaging those deposits, and that's their income. We also have a business for the person that doesn't have the personal and they kind of maybe run their whole life through their business accounts. We use the business account and then apply either an expense ratio to their deposits or a self-prepared a P&L from the borrower to get to a net income off of their business account. So that's a great question, and the answer is either one, whichever. I would say the preference is the borrower that pays themselves, because that's cleaner. We're not getting into their business account, but the business account is actually probably the majority of the loans that we do. So we can use either.
Okay, there's another question, which is a good one for this, and it's with respect to this exact scenario. That LTV is what this particular person is asking us on the bank statement loan. What kind of LTV can we look at? But you're going to go through the quick quote with everybody to give them example of that. So
yeah, but it's still, we will do up to a 90%.
Okay.
With no MI. None of our loans over 80% contain MI. So we'll do up to a 90% on these bank statement loans, and jumbo loan amounts, large loan amounts. We can do over $2 million, $2.5 million to be exact, at a 90% on a bank statement loan, 80% up to I think 3 million. So
wow.
In really large loans, and that's the majority of the borrowers that we see. Our average loan amount on bank statements is significantly higher than the other products. So generally it's clean credit, and generally they have lots of assets. We can go up to 90%, but on these bank statement loans, I think our average LTV is under 80. So a lot of these purchases, borrowers are bringing pretty significant down payments because they have the money. They just haven't had a way to get a loan to buy that house of their dreams.
Right. How about prepayment penalties? That's being asked.
That's a great question. For any owner-occupied or second homes, none of them have prepayment penalties on them. So I can talk about this now, but one of the advantages, a huge advantage of doing a non-QM loan, is that you're setting yourself up for doing two loans. You do the non-QM loan now, and then let's say it's a credit event, and then once they season and they can then meet agency or prime jumbo guidelines, then you can bring that borrower back in and do a refinance with them down the road. So no prepayment penalties, and we've seen a lot of originators that's how they built their non-QM business, is they're doing a loan or two a month, and then the following year or 2 years later, every month they're doing a refinance of a previously originated non-QM loan on top of new non-QM loans. So, it's that residual income really is what everybody's looking for in the mortgage business. But unfortunately, at the end of the month, we all start right back at zero, right? Well, by doing non-QM loans, you can kind of build this residual built-in refinance market for yourself a year, 2 years down the road.
Cool. Sounds good. Let's move on to the next one.
Okay. All right. Awesome. Another big category in the non-QM space are investor loans. I mentioned how many foreclosures there were during the crisis or following the crisis. And because of that, there's been a lot of people that have become residential investors. And so, but, investor guidelines, through Fannie Mae and through agencies, they require just like, the same documentation, income documentation that's required for owner-occupied loans. So we have a great alternative. We call it our investor cash flow loan. And what it is, we're looking at the credit of the borrower and the assets of the borrower, but we're looking at the expected cash flow of the property that they either own or they're buying. So doing a comparison to what the debt is on the property versus what the rent is, and as long as it's equal or very close to that debt, then we can do a loan for that borrower. We don't look at any income of the borrower. We're looking at the income from the asset. So investors that have multiple properties, Fannie Mae, I think they have even a cutoff of 10 finance properties. So anybody who's got lots of properties, this scenario, it was a borrower's 19th investment property. So their only options really had been hard money. But our investor cash flow gives them a much more, it's a 30-year AMD loan. And so that's what a lot of these borrowers really would prefer. We can do purchases and then cash outs on these as well. Cool.
There are a few questions popping up if you want to grab them real quick.
Okay.
These are good questions too. What is there a buyback period for the broker or the mortgage company that's sending you the deal if it does indeed default?
Well, we there's a lot of things that we do at Angel Oak, and one of them is that we take our loans and we securitize them and sell the bonds that make up the securities in the non-QM market. But I won't get into the technical aspect of that. But we do need these to be on the books. So they have to be on the books for at least a year. And we ask all of our partners to not refinance these borrowers in less than a 12-month period.
Okay.
We understand things happen, but we can't churn these loans. Even though it's a built-in refinance, it needs to be a built-in refinance a year and a half, 2 years down the road.
Okay, yeah, and that answered another question that somebody had.
Okay.
So, and then the other question is, and I know you'll get into this when we get to the quick quote, but they're asking, can you do fixed rates, or are these all your typical, your 5-year ARMs or
yeah, they're all 30-year AMD loans. The majority of what we do are 5-year ARMs, but we do have 7-year ARM options, and we always have a 30-year option for the borrower that wants the fixed rate.
Okay, good.
So good questions.
All right.
Okay.
Let's keep going.
All right. So here is, this isn't a scenario, but I just like stick figures, and I think these are pretty good just to kind of give you an idea of the different categories. So we talked about investors, we talked about bankruptcies, foreclosures, an event, self-employed, those bank statement, alternative income, that's really big category, and then low credit scores. I think I want to just, it's not a scenario, but there's a couple of interesting facts that a lot of people don't know. 50% of Americans have a credit score below 680. And, 680 is one of those big hurdles, especially in jumbo financing. You can't have below a 680. So if you're not offering non-QM loans, you've cut out half the population for you to even have a potential to do a loan with. And then as you go further down kind of the credit spectrum, but a third of Americans have a credit score below 620. So again, and we know 620, that's a really big cutoff. No conventional, no agency loans below 620. So that's a third of the population. And we always say not everybody below a 620 can qualify or deserves a loan, but there are good qualified borrowers in that population. They just haven't had any opportunity or any options prior to non-QM coming into being. So anyway, good little fact that I think it's pretty interesting when I learned that. Another big category is our asset qualification, and I don't have a scenario on that, but that's for someone who has a lot of assets but currently doesn't have documentable income. We can actually use the assets to qualify them, their ability to repay based on their assets, not their monthly income. So pretty interesting that I think can help people capture more loans.
Yeah. Staggering statistics on the credit scores. It really is.
Yeah, yes, it is. All right, so now we're going to change gears a little bit, and I want to go to our website. And we talk about takeaways from today. I would say a big one is just our website. If you can just remember angeloakms.com, and it's right here, angeloakms.com. We have lots and lots of resources right here at your fingertips. So please make note of that. Again, we'll send all this out, but I think this is something that we've got. Really everything that you need to do business with Angel Oak is right here on our website. So I wanted to just kind of start with a couple things. First of all is right on the top. If you don't know who to work with at Angel Oak, it says right here, find an account executive. And if you click on that, it'll take you to a nice, pretty map. And wherever you live, anywhere in green is where we are currently licensed and doing business. You just would click on a map. Click on a state within the map, and it's gonna pop up the account executives and what area they call and their contact information. So if you're in Texas, this would pop up. So a really good resource. Our number one resource from our website, sorry, I'm going back here, is our quick quote. And that's right here. It's a quick link to it right on the front of our page. But I wanted to just spend a couple minutes showing you our quick quote. When you go in there, it's going to ask you for the name of your company, and I'll explain that in a minute. But so you would just type in the name of your company, and I'll just make one up, and it'll log you in. And the reason we do that is if you're approved, there's different compensation levels, and so we just want to make sure that you're seeing the correct comp plan on this quick quote. So that's, if you're not approved with us, just put in your company. You can still access and use quick quote. It just won't have any, it'll just have borrower paid pricing in there. So this is quick quote, and really what I want to show everyone is how easy this is. This is a very simple process. We have a handful of drop-down boxes. You only have to answer 4 before you start getting options, and I'll show you how that works. But let's look at a scenario. So 740 credit scores, and again, you can pick whatever it is. Loan amount, let's say it's a $750 to $1 million loan amount. Let's just say on this one, we're looking for a 75 LTV, and we've got 0 times 30 in the last 12 months. As soon as you answer that 4th question, options start popping up, and you can see there are different products. And what's really awesome about this is, remember, I asked for a 75, but this tells you for this borrower in this scenario, we could go to a 90%. And so it gives you the rate and gives you the options, tells you a little bit about it credit-wise for you to be on the lookout for seasoning of 48 months and things like that. So very simple, very quick, and it's just a great place to start. You can, if you're sitting across from someone and they tell you some things about them, and they, you know that they've had a bankruptcy or foreclosure in a certain amount of time, you can just go in here and plug it in. I wouldn't start quoting rates from this, but you can at least see that, yeah, it looks like we might have some options. Let's take it to the next step. So the other thing is you can change on the fly. Let's say you started off and it was fully documented income, but let's go with the 12-month, that you find out they're self-employed and you need to go bank statements. So you just make the change right here and it automatically adjusts the scenario. Again, we asked for a 75, but you can go to a 90. And so it's right here, it's at your fingertips, and anything that you change, let's call this an investment property. Okay, so it immediately modifies it and says, You ask for 75, we can do an 85 bank statement investment property. So again, super easy, super quick. That's really why we named it Quick Quote, because that's what it is. It's really quick. So again, our most popular spot on our website is this Quick Quote. So remember that. The other thing that we'll send to you afterwards is a little step-by-step how you can put an app on your phone that will run a quick quote. So let's say you're out in a model home on a Saturday and you meet a borrower or a realtor and they give you a scenario. You could actually run this quick quote from your phone and tell them, yeah, it looks like I can do a 75 or a 90% or whatever it is for that scenario. So it's mobile, it's quick, it's easy, and as you can tell, I'm kind of a big fan of it. So
you're spurring some questions here real quick. So let's go ahead and dive into these.
Okay.
So first one, this is a good one. Someone's obviously noticing that the rates look a little bit higher, of course, than what's available out there on your plain vanilla agency deals. So they're asking, what's a good way to get over the objection of the higher rates?
So these discussions with these non-QM borrowers, it's really not about rate. I mean, any of our loan officers that are successfully selling non-QM and closing these loans and making a lot of money on them, that's really not even the point of the discussion. It's really about solutions. So you really have to be that consultative salesperson where you're finding out their scenario and you're putting them in the best program that's out there for their scenario. I mean, a self-employed borrower who can't document their income, they're not getting a Fannie Mae loan.
Right.
I'm sure they want the 4.5% Fannie Mae loan, but they're not getting it. So that's where you, as an originator, have to educate them on that. And then, like in that scenario, for them to get the Fannie Mae rate, they're going to have to get a new accountant or redo all their tax returns and pay a lot of money probably to Uncle Sam. So is that a better deal for them?
No, definitely not.
Pay a little bit more on an interest rate on their mortgage? They can run the numbers. You can run the numbers for them.
Yeah. No, yeah, I think I think if you can, it's going to be pretty easy to present, I think, to a borrower who knows I can't get the deal. You can get this house. It is going to be a little bit different in rate. And it's really not that bad. I mean, the rates are pretty good, in all honesty. You know what I mean?
Yes.
So, it's just because of your situation. This is what you've got. But, you're in this thing for 2 or 3 years, something like that. Then we'll look at refinancing you out of this thing. Hopefully, market conditions are going to work for us. A couple more quick questions here.
Sure.
You mentioned, if you're not approved. So there's 2 questions here, and you can answer both of these. So you mentioned if you're not already approved, you're only going to see one type of pricing that's available to them, which is borrower paid, I think.
That is correct.
And then, so someone is asking, how does the broker get paid? Is it all borrower paid, or is there other ways to get paid? That's one question. And then the other question is that pertains exactly to this is, how can I see if my company might already be approved? So can we do that from the website?
Couple good ones. I'll start with how do you get paid in the first place? Well, we do have a lender paid option, and if your company was signed up with lender paid compensation, that rate would be where it says NA, where my cursor is. So we have lender paid as an option on all of our loans. We also have correspondent. We have a correspondent channel. So if you're a lender and your company would prefer to be correspondent versus wholesale broker, that's an option. And then to find out really if you're approved, the best way is to contact your local account executive and go back to that map, that I showed you earlier, and just contact the account executive, and they can tell you exactly if you're signed up for lender paid, and can walk you through the process if you're not. And I'll actually show you that in 1 second. So any other questions that you see right now, Frank? Or
just one more while you're here.
It's
a good spot to ask this one is, do you have guidelines and matrices available on the website?
We do not, and there's a reason for that, is because first and foremost is we make a lot of exceptions to our guidelines. We have applied common sense underwriting and common sense lending to the mortgage business. And I know that's kind of a foreign term, but some of us that have been in the business a number of years remember when common sense was a big part of mortgage lending. Well, that's really what we brought back. So the last thing that we want to do is have you, as an originator, look at a guideline and say, no, it doesn't look like they can do that. Then, in fact, there might be a chance that we can do that. So we encourage you to use Quick Quote, get some high-level information, and then the next step kind of leads right into this is right here. It says pre-qualification request. From the Quick Quote, you would just click that, and then that's how you send us the loan quickly. And you pick your account executive. Every account executive we have is listed. Then you fill out a little bit about yourself. And then the most important thing is you're going to upload the 1008, 1003 credit, bank statements if it's a bank statement loan, and then any comments or notes, and you just hit submit. And that goes directly to the account executive. And that account executive is going to, within 24 hours, get back to you in writing with pre-qualification of what loan we can do. And that's where the exceptions get made. And exceptions are, they're all over the place. There's not even any one category that they fall into, but that's what our account executives are experts at identifying what might be a challenge and addressing that up front with you so you can address it with the borrower, and then we're going to get you something back in writing that says, we can do this loan, we can make this exception, and this is what the loan will look like. So really simple, really easy. You start with Quick Quote and then upload some documents, and we're off to the races.
Cool. There is one more here before we move on to the next part. Reserves requirements and down payment. Is that something that can be gifted, or does it have to be their own money? Okay.
Yes, we I think I mentioned we do a lot of 90% loans, and what we said, the borrower needs assets or access to assets. So gift funds for down payments. We have some loans you can do 100% gift on those. We actually can use cash out as reserve. So there is flexibility. Again, it's kind of these common sense guidelines.
Okay. And then another quick one here is, where are the loans actually underwritten? In Atlanta?
So we have two service centers, one here in Atlanta. We also have a full service operations center in Dallas. So every loan is underwritten either in Atlanta or in Dallas.
Okay. All right. Cool, man. Well, we're good for now. Yeah.
Okay. All right, cool. Well, then I'll just show you real quick, for those that are not already approved and you're not approved with us, right here on our first page is a broker package. And you just would click on that. Again, you can reach out to your local account executive, which I would highly recommend, and they can walk you through and help you with any of this. Or you can just go online and download the broker package and get that started. It takes a few days to get approved, and you can be closing non-QM loans very soon. So right here on our website. And again, quick link to the pre-qual request. If you already know you want to get it in front of an account executive, you don't have to go through the quick quote process.
Nice.
So how are we doing? We doing good on time?
We're doing good on time. Is it my time to jump in?
No, well, I wanted to show one more thing.
One more? Yeah, okay.
Yeah, just one more. So the other primary use of our website is, once you are approved, you'll be able to log into our website. So I'll show you just how that works and really why you'd want to do that. A couple things. One is we have account managers, and they're all listed here with pretty pictures of them and all their contact information. But the other thing is that you're going to log in, and there's some really awesome resources that we give you, some tools that people are going to want after you do what you're going to talk about, Frank. So like right here, marketing portal, flyers. We have flyers, and I'll pull one up. I'll pull up a bank statement flyer. But this is a flyer that, if you'll notice, has nothing about Angel Oak on it. So up here, you would insert your logo, and then it has some bullets about the programs itself. And then you would put your contact information on the bottom. And then you can save these, you can print these, you can email these, you can post them on social media, you can do whatever you want. So by being approved with Angel Oak, you have direct access to entire library of marketing flyers. We have marketing videos. We have all kinds of exciting stuff you can use to market yourself.
Awesome. That's clutch.
Yeah.
We have all these great products, and now I want to get the word out, and you've already provided the marketing materials to make that happen.
Yep.
So that's a kind of an absolutely perfect segue into the next piece here, which is, okay, I get it. I'm approved. I understand how to use Quick Quote. I got these cool flyers. I got these marketing materials. Where do I go? What do I say? How do I make this all happen? So then we'll segue into the second piece of this. Is that good? We ready to go to the other half? Okay.
That'd be great. You gonna take the screen from me now?
I sure will. Yeah. So we're gonna switch over here, guys. Just hang tight, and we're gonna come up here, and we're going to come here just a second and make me the presenter, and we're gonna say show my screen. And oops, let's go back. Let's go back. Okay, so I believe you are seeing my screen now. Is that everybody see that? You see that, Tom?
Yes. Yep.
Okay.
Sure can.
We'll just hit play on this, and we'll get going here. So like we said, so a lot of great information. I think you guys can see that there's probably some business in the pipeline right now that might be able to get done. Or maybe some that you recently kind of put to the side that you might be able to, open that file drawer and dust a couple of those babies off and maybe get some of these deals over to Angel Oak right away. But let's say we want to go ahead and start marketing for some new business. Obviously, we want to go ahead and connect to Angel Oak, get on their website, get approved if you're not already, which doesn't take long, just a couple days, Tom says. Then you can have access to all the marketing tools. So once you have access to all the marketing tools, what are we going to do with them? And so this is where I'm going to take the lead on this one, guys, and kind of jump into this. But Tom is still here, and he will jump in from time to time and put his input in. So there's a couple of different types of targeting that I see using non-QM products on, and I see it as referral-based targeting, and I see it as we'll see when we get there. So let's just start with referral-based targeting. The ideal candidates for referral-based targeting would be your real estate agents and your CPAs. You remember Tom was talking about the fact that these CPAs are doing deals for self-employed people, and they're perfect candidates because a lot of times those self-employeds come back to their CPA and say, "Oh man, I'm trying to get this home loan, but I can't because you're too good at your job." And so that type of a thing. So CPAs are a great referral-based target to connect with non-QM, and of course our real estate agents are. And we're not only going to be connecting with the real estate agents that we already work with, but we're going to find ways to get new real estate agents as well with this. And so with respect to realtors and certified public accountants, and we want to find how we can target some new prospects. I mean, you might already have a CPA that you're working with. I'm sure you already have real estate agents that you're working with. With those existing relationships, you want to get these marketing materials, go and sit down and have conversations with those people right away. This is the low-hanging fruit that you can go in, like I said, right away, have these conversations, let them know, hey, these products are available through me now. So let's not ever turn away a deal. If anything pops up, don't ever, think to yourself that this is probably going to go through. So don't give me a call. Give me a call on everything because I can probably get it through now that I'm doing these products. So, but let's look at if we want to get some new real estate agents and some new certified public accountants. And so what we can do here is we can network through our industry peers or our friends to gain referrals. And we can do this utilizing social media and instant messaging, email and the phone, really easy. All you want to do is just get this little message out that I have here on this pop-up bubble or this talk bubble. So just imagine this. You could just instant message some of your past clients, your friends, your acquaintances on Facebook. You can just go in and do instant message with them. And I like IM, guys, because IM is private, and people are a little more, they'll share some information with you easier in a private setting than they will if you just made a post on your wall on Facebook. You could still do that, of course. Feel free to do that. But if you do it through IM, it'll work a little bit better, or especially through email. If you want to do a little email blast to everybody in your database, if you have that capability. And of course, the phone works. But you just want to send a little message out that says something like this. Hey, do me a favor. I'm looking to connect with some real estate agents and CPAs that I can trust. And that's the key there. So if you have a recommendation, can you send me their contact info? Thanks. You send a little message like that, and if somebody does take the time to read it, and if somebody does happen to feel like they want to help you, they absolutely will do it. I can assure you, if you IM this to a bunch of people on a fairly consistent basis, or if you do this through an email blast, you're definitely going to get responses and you're going to get leads. And these leads are what we call referred leads, right? So this is why we call this referral-based targeting. So you will get some leads that you can follow up on. And so now we're going to figure out, okay, well, when I get these leads, where do I go from there? Well, the first thing I would do is when you get some real estate agent leads and some CPA leads by your reaching out into your database and your Facebook fan base, is I would research them as they come in. It doesn't hurt to do that. In fact, it's wise to do that. Me and Brian have used this strategy quite a bit, and it's worked out for us extremely well, where if we're trying to land an account, something like that, we'll get a referral or we'll get a target in mind that we want to go after, and we'll do a little bit of research on that individual. These days, you can dig up a lot of information on people just through Google, LinkedIn, and Facebook. And what are we trying to find out there? Not all we're trying to just do is learn about them a little bit, see where they've worked. LinkedIn will tell us that, see what their interests might be. Facebook shows us that. Google will bring them to a website if they have one, where they might have a bio about themselves. Just so you can learn a little bit about them. They may have attended a particular college you're familiar with, something like that. And that's just information to have in your head before you make a call or reach out to these guys to start approaching them. And obviously, if you have a little bit of background information on them when you're having your initial conversation with them, you may be able to use some of that information within the conversation, which is going to instantly kind of bring a little familiarity, or break down some barriers, because there'll be some common interest or something that you can speak to them about that's about them. So we're going to look at this here real quick as our call structure and prep before we reach out to these people. This is a referral, so it is a bit of a warm handoff. So we're lucky in making these calls to these individuals that we want to target, that we are going to get to say, hey, so-and-so asked me to give you a call. Or you could say, so-and-so referred you to me, rather, is what I should say. So-and-so referred you to me. And so that's going to immediately break down barriers on that phone call, because they're going to recognize the person that referred them to you. So with our call structure and prep, when we connect, we're of course going to identify ourselves and why we're calling. And this here, it says if you can make a connection through a mutual business contact or association you both belong to, you've already increased your chances for a successful call. Again, this is the referral, right? So, hey, this is Frank with ABC Mortgage. I was going to give you a call. I want to talk to you about some products that I have that might help out some of your clients. I was referred to you by so-and-so, who's a friend of mine. And I was asking if there were some people I could work with that might be interested in this. And this so-and-so said that I should call you. And then, so right away now, we've broken down the barriers. The good news is, too, is they're not going to hang up on you at this point. It's impossible for them to do that. They would officially get the heebie-jeebies if they did that, because now they're hanging up on, somebody who was referred by one of their clients. I don't think that's going to happen, recognize, say something nice about the prospect. Let them know you'd taken the time before you called to admire their accomplishments. That's why we do the research on them. So you don't have to say it exactly verbatim here like this, guys, but this is a structure and prep. So this is just letting you know, here's how you might use the information that you gathered, okay? When you're having a conversation, you're going to want to let them know what's in it for them, of course, which is going to be that they're going to become more of an asset for their customers, right? Why you should meet is so that you can get to know each other. Right, so you could give them some information that they can take back to their office, okay? And then, of course, when you're having a conversation with them, you're going to make sure you want to listen carefully, because listening, if you do listen carefully, you become a very good listener. You'll find that there's other things that might come up in this conversation that you can work with, or there might be other directions that you can go. There might be other ways to gain business within this relationship that you weren't even thinking about, even approaching them with this non-QM angle. So make sure you listen closely. I know a lot of I've heard it somewhere where it said, like, if a lot of salespeople, when they look like they're listening, they're just waiting for the next time that they can talk. And so it's just don't, yeah, right. don't be that guy or gal, right? And when you're listening, you're not just waiting to talk again, you're actually listening, okay? And then on this call, we're just trying to get a commitment to get together. We're just trying to get an appointment. We know it's a success when the guy or gal has said, sure, let's get together tomorrow, or sure, come on by, or sure, let's meet at Starbucks, whatever the case may be. All right. So this is a good thing to review before you make your calls. So we want to target our people, get some referrals, do our research on them, make sure we're ready to make our calls. So here's where we make our call, right? This is calling real estate agents. You know, hey, I'm Frank with ABC Mortgage. I was referred to you by Sally Jones. Calling because I've got loan products that help borrowers that don't fit into your typical conventional or government financing. And I was just hoping I could drop by or meet you, maybe get some coffee, show you what I can do, just in case you come across a borrower that wants to buy but just can't get traditional financing. Can we get together this week or next? Very simple script like that. You can internalize it on your own, right? But real simple. And I can assure you, when you're saying you were referred by someone that they know, they are going to go ahead and set that appointment. And that's the power in asking for the referral. You will definitely get the appointment if you're being referred by somebody, without question. I would find it very shocking for them to say no. For our CPAs, we go along the same lines. This is Frank, ABC Mortgage, referred to you by so-and-so. Calling because they have loan products that can specifically help self-employed borrowers that don't fit into typical conventional or government financing. So let me kill this real quick, sorry. So that will definitely get you some appointments with them. I was hoping I could drop by, meet you, get some coffee or whatever, just in case you come across any of these clients trying to buy, but they reach out to you and they're having problems because of their taxes. You know, I can maybe help them out, that type of a thing. So again, we're sending these scripts to you. You're getting these presentations so you can don't have to memorize this now or take a screenshot like Tom said. But basically, go ahead.
I was just saying, the great thing about CPAs is they know exactly which clients of theirs want to buy a home and have the ability to repay, but they know that their tax returns won't let them qualify. So, I mean, they're sitting on those people, and a borrower is going to really listen to their CPA when you build that relationship with them. So
definitely, yeah. They're once the CPA knows that you're the self-employed, loan guy. I mean, you want to get as many CPAs on your side as you can with that, because it's a need. It's a need that's today, right here, right now. And so that's why it's so great to go through this training real quick. All right, let's talk about research-based targeting. So we had referral-based targeting. Now we're going to go to research. So we've got our CPAs, we've got our real estate agents, and that's going to be fast and I think pretty easy to get going for you guys. You can literally get that going today. The next thing is we got builders, and we have small banks and credit unions. And so this is one of our favorite ones for Tom and I. But let's continue down the road. What I've used in the past that's worked very good for me in this respect is just use Google Maps to find these new targets. And so here's an example and a picture that I used to find some builders. Oh no, this is just here on this screen. I just want to let you know, when you're doing target-based, are we doing research-based targeting, finding these builders and these small credit unions? In this scenario, guys, you can expand your radius. Okay, so I know a lot of times when we work, like I'm in Vacaville, I'm in Solano County, which is basically 3 or 4 cities, really 3 of the main cities, Vacaville, Fairfield, and Vallejo, right? So there's 3 kind of the tri-city part of our county there that I would focus on here locally. And that, is only about a 15-mile radius or something like that of all those cities, maybe 20 miles, right? It's not very big, okay? But if I could, with this method of finding builders and small banks and credit unions, you can really expand out. The reason that we're so narrow and local in our local business is because, people want to work with somebody locally, right? But when we're working with non-QM products and we're bringing something to the table that they might not be getting locally, especially if we're working builders and small banks and credit unions, we can expand our radius. So maybe expand out to 60 miles. That's what I drew a circle here. You can see I'm in the red spot right in the middle, but as you can see, there's multiple cities around me now. If I expand my reach, where I can go and try and dig up some builders and some small banks and credit unions to go and call on these people to see if I might be able to get their non-QM business. Builders, we'll talk about them real quick. They may or may not have a built-in lending relationship. And if they do, it's typically prime stuff. It's typically not non-QM. And so having a non-QM resource is very beneficial to them. If you are the type of guy or gal that can make it where you are on a fairly consistent basis, visiting the same group of builders and small banks and credit unions, you can become that non-QM resource for these guys, because small banks and credit unions, they aren't doing the non-QM stuff either. And you've typically got loan originators sitting in there who are taking the bank business, right? I used to be one of them many, many years ago. They sit in there as loan originator. The people are up at the teller doing their transactions, you know, and they go, hey, I need to talk to somebody about a mortgage. They go talk to that guy over there. And then they come and they talk to you. So they're really, you know, sitting in like in-house, they're like an in-house lender. They're just gathering this business, and they're doing all agency stuff is what they're doing. A lot of times they're not even doing govies, you know. So if you are a resource to that loan originator in that small bank or credit union where, you know, it gets kind of old saying no to people, you know, and not having anywhere to send them, you know, sorry, you know, you're self-employed, so your bank statements, I mean, your tax returns aren't working for us. Bye. It's a lot better for those guys to say your tax returns aren't working for us, but you might be able to get this done through a friend of mine who specializes in this stuff. Here's his card, right? So you definitely want to do that. Again, this takes consistency, just like anything else. You know, if you can visit these guys every couple of weeks, that'll be great. So anyway, expand our radius. And so here's what I did, and I did this for small banks and credit unions. This is a snapshot of Google Maps. I typed in Solano County credit unions, and right down here comes a list, and bing, 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 here they are. And then right from the list, I can click on it, and I can get their phone number, and I can call them, and I can say, hey, do you guys do mortgages? And if they say yes, I say, can you hand me off to your mortgage guy? And if I talk to the mortgage guy, I can say, hey, do you do non-QM? And if they say no, then I can say, great, let me come in and visit with you. And we'll go on to that script from there. But I would do my research on them, and I'd find them, I'd call them, I'd figure out who my good targets are, and then I'd go out and visit them, because these are prime targets for you, okay? For builders, it's the same thing. I just typed in Google Maps, you know, I typed in new homes, okay? And here's everything popped up. Look, bing, 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 bing. Now, some of these are going to be corporate offices, and you'll be able to figure that out. But even if you call the corporate office to find out where the local subdivisions are, you can get that really quickly, or go to their website, find out where their local subdivisions are, and then you can start making calls to those subdivisions and talking to the salespeople there, and just flat out asking them, do you have in-house lending? Yes or no? Does your in-house lender do non-QM? You know, where people, you know, if deals that fall through that might not make it because they can't get traditional financing. If the answer is, yeah, we have that problem once in a while, you can establish out of all these little bullets here, right, who you want to go in and start calling on. And as you can see, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 within my little 60-mile radius that I put up on mine. There's 12 targets, which could be more than 12 subdivisions. It could be 20 subdivisions, because some of these are corporate offices, if that's making sense. So that's what you want to do. So then what you want to do is, after you make your calls and you figure out who your targets are for these builders and small credit unions, you want to go back to the Angel Oak website, download the flyers, put your logos on them, of course, not Angel Oak's. Put your logos on them, put your information in them, and hit the road. You want to get out there. And I would do this every couple of weeks. I mean, if you could do it once a week, if you could be in the field for your local real estate people once a week, and in the field for your small banks and credit and builders, once a week. So 2 days out of the week, man, it would be great. And if right now you've got a pipeline that's not that full, where you don't necessarily technically have to be staring at your computer email 24 hours a day, which I don't think we really need to be doing. If you can muster up the gumption to get out there and go into the field, you know what I mean? This can make a huge difference for you extremely quickly. Yeah, I think you'll be shocked at how fast you can get some results out of this. And plus, the other thing, Tom, we've talked about this. There's just something great about going in the field. I mean, once you go in the field,
get out.
It's wonderful. It's like, hey, there's sun out here and there's fresh air and I'm walking and I'm talking to people and it's just a wonderful experience, and it can actually become addicting. And it's something that's just lost these days with the advent of technology and social media and all that. It's just lost.
And we just talked about earlier, Frank, it's fall. It's a great time to do it.
Perfect time.
Get some fresh air, and you've got something to put in front of people that they don't know they're looking for it, but they are looking for it. So you can be the deliverer of that message.
I'll tell you this too. Most of you guys in here, mortgage originators, a lot of you guys might be brokers too. Who do you tend to give your business to? I mean, it's typically going to be the people that somehow make an appearance to you. I mean, that's most of the time, that's what it is. It's the people who are out there walking in the office saying hi. They tend to get the business. And if that's you, you can get the business. Let's look at some scripting now for the builders. So we come in, we meet with the agent. We already know that this person, said, yeah, come on in or whatever. You can just sit down and say, hey, I'm in the area. I talk to you on the phone, or I'm out in the area calling on builders. Just check and see if you got any recent turnedowns you might need to take a look at. We've got loan products designed to help borrowers that don't fit traditional Fannie, Freddie, or government financing. Is anything you'd like me to take a look at now? That'll either be a yes or no. If it's a yes, take a look at it. If it's a no, say, well, no problem. Here's my contact information. Don't hesitate to reach out to me if something arises. And then stay in touch with them. And I'm telling you what, man, I've worked myself personally when I was originating, where we would go out and call on builders over and over again, trying to pick up the scraps, trying to pick up the turndowns, where that has actually turned into, well, now you're our lender. I mean, that has happened. And I know everybody on this call has probably heard of that happening or has had it happen themselves. So just getting out in these builders' offices with these non-QM products, picking up the non-QM business, sometimes can turn into, now you're getting it all. So I would really recommend doing that. And the same thing with the small banks and credit unions, a very similar script. Hey, this is Frank with ABC Mortgage. I talked to you on the phone the other day, and I'm out in the area visiting you guys, and I just wanted to see if there's any turn downs you might need me to look at that you guys can't do. And then here's kind of a clutch thing. I say, and I realize you might be working with local real estate agents. I'm not here to deal with any of that. In fact, I'm 40 miles away, right? I'm not going to be, I'm not going to be messing with any of that stuff. I don't want to mess with it. I assure you I'm not going to get in the way of any of those relationships. I just want to help any of your customers that you can't handle. Is there anything to take a look out for you now or whatever? And if yes, take the deal. If no, just stay in touch with the guy. Go ahead, Tom. You got something?
I was just going to say, and the great thing about those is if they refer somebody to you, they're kind of already somewhat pre-qualified. The loan officer at a credit union isn't going to send you somebody that has no chance of ever getting a loan. They're going to send you somebody that they believe has a chance. They just don't have a product that they can put them into. So you're going to get really good leads from them.
Yep. And then simple thing too, guys, is on these new prospects, which are the new real estate agents you're talking to, the new CPAs you're talking to, the new builder agents you're talking to, and the new small credit union, the small bank credit union LOs you're talking to, get them into your CRM, do weekly follow-ups, either by phone or personal visits, right? Stick them in there for a year. And I guarantee you, even just after 3 to 4 months, you're going to be generating new revenue from these guys. It's going to be happening. You might generate revenue from these guys immediately. I mean, how many times? If I'm hoping that everybody who's on this call has at least done field work a little bit in their life, because if not, then that's just sad. But for those of you who have, I guarantee you, anybody who has could tell you, anytime that I've gone out and gotten face-to-face, belly-to-belly with people, many times I wind up picking up business on the spot. It just happens because you're out there. And if you do it on a consistent basis, it's just going to happen. It can't not work. It just works. So with that, we are at the top of the hour. So let's just do as many. We can't really field too many questions here because I want to get you guys out of here. But if you have any, go ahead and chime in. And there's really not a lot. I think everybody was just riveted to the presentation, which is great. But there is a price quote or quick quote question here. When I price on the quick quote, I don't see any reference to the program other than non-prime. Would this pricing apply to an owner-occupied bank statement loan? So maybe somebody is on the website and doing that already.
Yeah, I mean, I guess I would say that would just be one of the drop-down boxes. Change the income type to a bank statement loan, and then it would tell you if that would work. So.
Okay, there is another question here, and let's see. Oh, there's 2 other questions here that we can get to before we can sign off. One of them would be, do you guys just do non-QM, or do you also offer Fannie, Freddie, VA, conventional?
We only do non-QM, and I really that's kind of that's really feeds into the success that we've had in the space. Is that's all we do. So we've absolutely become experts. Our account executives are not, they don't keep up with Fannie guidelines and FHA guidelines. They only know non-QM guidelines. So our entire organization is built around non-QM expertise.
Okay, and then one more here. Oh, great webinar. We're sending out the slides. Yes, we are. Okay, so yes, and one last question here, and we can sign off. What's the average turn time for Angel Oak on a deal, a real deal?
So our average from start to finish to get a loan closed is under 25 days. So
wow.
We can close them even quicker if, you know, the one thing about our business, we're doing probably 85% purchases. And we realize that the one constant in this transaction is that contract date. So even if the loan might have messed around and tried to go different routes, we still have a 31st of the month close date. And so we're focused on turn times that are very quick so that you can get these loans in and out efficiently.
Excellent. Two more quick questions and we'll let everybody go. Okay.
Okay. All right.
How about manufactured homes?
We do not do manufactured homes.
Okay. And who orders the appraisal? Them or you?
So we have a process as a broker. You would order the loan originator or broker would order it through an approved. We have a choice of AMCs that you'd order those through.
Okay, cool.
Your account executive can walk you through all of that. It's real simple.
Cool.
Yeah.
All right. Well, with that, I think we are at the top of the hour here. We fielded pretty much all the questions. We did it a little differently this time. We were able to go through and kind of do it
while they came in.
As we came in, yeah. So we fielded everything. Well, that's it. We'll go ahead and sign off. We would encourage you guys to, jump on this, go for it. You're going to do well with it. We'll be getting out the recording and the assets to you guys as fast as we can.
Yep.
You should have it no later than, by tomorrow morning, something like that. Do that and do us a favor and continue to stay tuned to our ongoing webinar series with National State Post and Angel Oak Mortgage Solutions. We're always coming up with fun, good stuff, great information to keep you guys armed to go out there and get a bunch of new business. So with that, we'll go ahead and sign off.
Awesome.
All right. Bye, everybody.
All right, everybody have a great day.
Bye.